Hey guys, welcome to another Trade Genius podcast. Got my good friend Bob Kudla here. Guys, there's not many more places they can hide. The signs are building. We're going to tell you what's going on in the market and what to expect. Let's dive in.
Trade Genius.
Okay, Bob. So, we've been reviewing some data points all pointing to the fact that we should be defensive. And, I think people are like, okay, well, when's it going to really come? Topping's a process, but what do you have for us today?
Yeah, I mean, the next 5 weeks, if we're not significantly lower the next 5 weeks, then we're at a full-on blow-off. So, February into March, you have seasonality, which we'll get to in a second, that suggests that the option sellers, they have to start buying back their sold puts. But first place I want to go to, Phil, is where the bond market is, and check out these corporate spreads. Every time it got down to the level where the dots and dashes are, we get a significant blowing out in spreads, which then correlates to a sinking stock market. And we're there again. And so it's just amazing to me that where are the risk managers that always allow this stuff to get to the point of exhaustion? It's just amazing to me. Everybody playing a game of chicken, and looks like we're going to get a reversal. And, twice a year, right? February, March, September, October is when VIX starts to raise its ugly head. And let's show you a chart here to show you exactly that. Yikes. Bad news, good news. Well, good news, bad news if you're short. So, we're looking for VIX to pop here, Phil, into the March OPEX. And then from then, April into June looks like our opportunity then to run the market higher again. So what we don't know is how offsides everybody is and how deep the sell-off's going to be, but it's coming. And then you'll be able to recharge in April. We don't know how long that's going to be. Typically, that takes you almost all the way into August before you get the next push higher in the VIX. So that's the standard. And the other thing, too, is, as we talked about last week, is that the year after a presidential election, you usually have a weak market, and Trump finding now he's stacking up the Benjamins, which is going to go ahead and reduce liquidity too, Phil. So I think short term, we've been warning you guys after February 15th, you need to be short. Well, today's the first trading day after February 15th.
Yeah, and also too, they were asking about a Bitcoin update. So I would just real quickly kind of, roll Bitcoin into the analysis here. Simply put, guys, this area up here is what we were looking for a cycle top. If we were going to die, we topped out on the inauguration day. Did not like how that daily candle was formed on the news event. Very similar to what we saw when the Coinbase IPO'd. That ended up rolling over from, we were trading about on the $64,000, $65,000 level. We ended up going down to low 30s, right? So that's about a 50% haircut. Could we do something similar? I don't see why not. This is my 3 moving average chart, and basically don't really want to lose this upper yellow line. If you do, you tend to go down to the middle line. That's where we're at today. If we start losing this, we're going to probably come down to this lower moving average down here at 88,350 or so. And that gets a little dicey because we do have a gap from this inauguration or this election move, right? When the crypto administration looked like they were going to take the election, markets priced it in really quickly. Well, we created a gap down here on that. So on the CME chart. So that's got to fill still. And I can show you what that looks like here real quick. So we have this, this is showing you the CME chart. We actually left a gap over the weekend here. Weekly opening gap. We thought maybe we could come up here and fill this. We did not do that. We got to the bottom of it, rejected down this morning pretty hard. Ultimately, though, I think we're going to revisit this zone and backfill this. You have to keep in mind, too, the equity markets already have done this move. They've already backfilled the election pump. Bitcoin's been stubborn up here, but in terms of like where this is going to go, this is my target down here. How that plays out, if we start selling off from here, we really can't get back above this gap, for example, and start rotating back up into this range that's obviously we're building out here. Then I think you're going to have to expect the move down into maybe mid-March, similar to what that VIX seasonality is telling us, right? Because VIX goes up when markets go down, and that's basically what this VIX move is doing up into the middle of March. So if that continues to play out, then I think Bitcoin probably fills that gap down there. So that's, I think, what you guys have to watch. So 91 to 92,000, very critical support area. But like I said, if we can get back above, fill that gap up there that we put in over the weekend, then I think you can have a rotation. I think it's gonna be a lower high rotation, but then you could probably shoot for something like between 102 and 105. Otherwise, brace yourselves. And, we could very well have seen the cycle top on inauguration day. How that plays out into the future, we'll see. If we do fill this gap below, I do think you could have a rally, but it's really going to depend on the macro, situation going on. I think there's some significant risks in the market, and I think you have to be very defensive here. For those of us that were in the room, I basically said we're exiting up here at the top, near the top anyway. We got out of alts. We got out, I said I was, selling spot Bitcoin. These are long-term sells that we're doing up here. So, and it's just because of the way that we topped into that news event, the inauguration. So had that not done that and we continued to go beyond 110, I would have stayed with it, because I think you have to target 120 to 130 in that situation, but didn't play out as such. And so I take those warning signs very seriously, considering the big picture, right? We're in late business cycle. So there's, you're dealing with major timeframes here. And the downside is actually pretty significant, the downside risk for Bitcoin. If we do roll into a recession, you guys have to understand crypto's never been in a recession. We could be down well into 2026 at levels you think are absurd, such as 20,000. And remember, when we went down to 15, nobody had that on their radar. When we dropped into 2022, nobody had a move under 15,000 on the radar. There was too many bullish things going on. And it's the same thing here. You got pro crypto administration, you've got, BlackRock ETFs are buying up Bitcoin, but those flows reverse. People forget that. Those flows reverse. These are bullish things, for the big picture, long term. But, if they reverse and this market decides that bonds is a safe haven, the liquidity will come out of the crypto market so fast it'll make your head spin. Doesn't mean that the story's over by any means for Bitcoin. It's just going to be, I think, a dip buying opportunity in the long run. I think at the end of the day, you have something that's extremely scarce and will continue to stair step higher, but you're still going to have a lot of volatility in a product that's, as I would say, liquid, right? Relatively speaking, when something's finite, it's fairly liquid. So you're going to have drastic moves in it. That cuts both ways. So anyway, that's, I know you guys were looking for an update on Bitcoin, and I just wanted to get that out.
Yeah, and for those that own Misty, below 88,000, the good news is that they have weekly options now on Misty, so you could do a stock replacement strategy if you wanted to. You won't get the dividend, but below 88K, I'm going to get more defensive on my Misty position. I wish there was a short MicroStrategy strangle. I'd have to create one personally, but if I want to keep Misty, but I'm with Phil. If 88,000 goes, then I got to kind of rethink how aggressive I'm going to be, because I'd rather save the cash and buy all that stuff back a lot cheaper later in the year or even into next year. So with that, guys, that's our update. We have an interesting one for you tomorrow or Thursday, depending on when we do our next podcast. That's also very deflationary in a good way, though. I'll see you guys later. Thanks, Phil. Thanks for everything. Talk to you guys later. Bye-bye.
Trade Genius.